Alright guys, check this out. This is the Canadian Japanese yen, Canadian dollar, Japanese yen. I got involved with this one a few days ago. And I started here mostly because the bigger picture, which I knew is very solid, strong, bullish technical picture. That's what we have here, because if you look at the monthly chart, you can find this really nice looking trading range. You can track this one back, believe it or not, all the way to the beginning, the very beginning of 2016. So we're talking about a pretty old trading range, more than 3 years now. However, what I find to be most important here is the fact that price came from the very edge of that system, right? So we're talking about, we saw that huge reaction a few months ago when price was landing. That was a hard landing here, all the way to 76.60, and boom, bounced all the way back and crashed at 81.25, which was supposed to be an obstacle. So once it did that, I was quite convinced that price will continue back to the higher section again, right? So here we can focus on this key level, 86.45. Now, when we saw what was going on coming from the weekly, the daily price section, of course, and I'm referring to the local price section. So price was beginning to build up a head and shoulders pattern, seemingly head and shoulders pattern, but it didn't really fall for that one. I think that one was actually a deception, right? A lot of times we see visually, right? Visually we can see that head and shoulders pattern, but if we don't have that symmetric setup in place, then we might think that this is a genuine one, but that's actually a deception. In fact, what you're looking at here is not a head and shoulders pattern. It's a trading range that one of the legs happened to be, taller than the rest of them, and it happened to be the middle leg right here. Now, the way I know how to find these deceptions and not fall for them is because I can measure the movement within the limits of the system, right? And even though price kind of broke above 84.37 when it was peaking here, it actually didn't, because we could go back to the weekly chart, right, and measure what happened here in real time when it comes to the weekly close, and we can see that spike suggesting that it was just an excess noise coming from the daily, which is expected. So the fact that it came back, closed back below, it was a very strong kind of evidence that the setup is very much intact. So if that's the case, of course, then we were looking at just a typical sideways movement rather than a real head and shoulders pattern. So I didn't really fall for that one, right? And exactly when it was supposed to begin breaking, right, roughly around this area, I kind of sensed that it was going to reverse, right? Because we saw the reaction on that 81.83 here, which is the bottom support. Take a look at this lovely reaction here. Then price made it straight to the mid-low key level, 82.64. It actually failed at first, which made me a little bit concerned at first, right? I thought maybe it's not going to break. But it came back, right, last Friday. It basically crashed that key level, and it's making its way towards the mid-high key level here, 83.55, which, by the way, you can find that I have a price target here, but that's just for the first trade, right? Because that's kind of the short-term cycle. That's the next imminent resistance. I want to pay some respect to that key level as a resistance level, so I've placed a partial for partial execution. But I do believe that price will continue, break forward, take it to the 84.37, and also break that one as well, and eventually make it all the way to 86.45, as we saw from the bigger picture here. So there you go, guys. I still have my stop loss level at 80.70. I would like to adjust this one, so my next step would be probably to push it by about 100 pip all the way to 81.70. Should be really interesting to see how things will play out here. That's about that for today, guys. We'll see you tomorrow.